Hello, Bryce here. Welcome to the Bookkeeper Business Secrets podcast. So this podcast is basically designed to help you, if you're starting or growing a bookkeeping business, be able to know either like what mistakes to avoid, what does it take to actually be successful, and make sure you can reach your goals in like the shortest period of time possible. So on today's episode, we're basically going to have 3 different segments. So we're going to do rookie mistakes, book of the week, and then we're going to talk about some pros and cons of different types of marketing methodologies. So first things first, I see that a lot of accountants and bookkeepers like either don't do when they're starting out is they don't have any goals. Now, this actually has like two sides of the spectrum, right? So there's really 3 mistakes: either 0 goals, goals that are too small, or goals that are too big, right? So first things first, you got to have some sort of goal. So whether that's a number of clients, whether that's a dollar amount per month, you need to have something. Now, I prefer to do a dollar amount per month because it allows you to be able to have some sort of target. Now, it also provides flexibility. Give me one sec. Last week I was talking too much and not drinking enough water, and it kind of caused my throat to get messed up. Now, these are things that I learned, from starting my accounting and bookkeeping business back in 2015. So it's been a really, rewarding journey so far. I've been really, really prosperous. I'm really grateful for all the different, stuff I've been able to do. But it started with having a goal. Now, the reason why it's important to have a little bit of a goal, but also have flexibility within that goal, is that you might not know how the market actually is. So I'll give you an example. Some people will come to me and they'll say, hey, I only want to have 5 clients to make like 10 grand a month. Okay, but it's like, okay, so within that 5 clients, you can have a huge variability in terms of like prices, in terms of, size of client, in terms of industry, niches. So in a lot of cases, it doesn't give you enough flexibility, especially if you say, I want to get 5 clients at $2,000 a month each. It's like, well, what if you get 1 client, but it's too small? And it's like, $500 a month. What if you find a client that's super big and you need to charge $5,000 a month? Well, your plan is automatically wrong. So instead, have a dollar size or like a direction, and then we can fill in the gaps once we're kind of like moving forward and we're growing. Because you can't really, in a lot of cases, if you're starting out, control the types of business owners you come in contact with. Because a lot of the marketing methods you're going to be utilizing are going to be based on like a little bit of luck, right? So it's like, let's say that if you're of course, if you're doing a mentorship program, like one of our mentorship programs, we will teach you easier methodologies to predict how much money you're going to make and what size clients you'll get. But if you're not in a mentorship program, if you're just doing this stuff on your own, oftentimes your marketing might conclude of networking. It might be stuff like cold calling. You might be doing stuff like walking into business owners' doors. And you can't always predict what is going to be on the outside. So in a networking group, you might meet someone and one person has a business that's just getting started. Another person will have a business that's 60 years old. And it's there's a huge gap in terms of who you're actually going to go after. Okay, so you got to have a little bit of flexibility. Now, the next thing that I like to think about is really goals based on your capacity. So most people, if they're working a full-time job, can handle anywhere between about 8 to about 11 grand per month worth of work. Now, the reason why this is because not only is it just about doing the work, not only is it about knowing the work, but it's also about how much energy do you have after a long day of work, especially if your job is more mental based and you're just having to think 24/7, or maybe you have a boss that's just very, very stressed, just stressing you out. Then you have kids, right? So it's most people only have so much energy that they can actually expend, or they can actually utilize. So if you run through that energy too quickly, it kind of makes it tough for you to be able to manage more and more clients. Now, an alternative way around that, we do teach this in our program, is how to hire people so that, even when you do kind of hit your mental capacity or your physical capacity, you're able to keep growing. But in the beginning, if you're just doing this on your own, you're kind of wanting to do it on your own for a while, I would probably recommend putting your goal at whatever your capacity is, plus thinking about your bill structure. So in most cases, to leave your job, you really want to have probably anywhere between 1.5 to 2x. We call it income to bills, so I to B, right? Because I want to make sure that my bills are covered every single month, every single day, every single month, every single week, every single year, right? And I don't really want to have to stress about it. So a lot of people will quit their jobs prematurely. It's like, they're like, I took the jump. It's like, ooh, let's not take the jump, man. Start your business, get things moving. And like for most people can start a business while like working their job. I think that's a really big misconception. Let me actually write that down. Can't start unless quit. That's a big misconception. I would almost rather you have a job while you're starting your business. And the reason why is because like it teaches you how to really handle your time better and be like more efficient. Number one. Number two, most people, if they get stressed out about like not having enough for bills, then it causes their productivity to go down in their business. And when their productivity goes down in their business, now they're not able to go and get more clients. So it's like a downward spiral, right? Versus in your job, then you still have the money coming in and you're able to make it move. Now, the one downside about having a business starting while you have your job is a lot of people, like their job is really good, or it's really kind of like, it's okay. Things could be improved. But as soon as you start trying to like run your business, then your job starts like looking a lot more attractive because it's the thing that's easier for you to do. It's easier to kind of stay in like the exact zone that you're already in. So that can be a little bit discouraging for a lot of people because like, oh, why would I push my business here? Or this person said no to me, or this person didn't want to work with me. But in my job, all I do is just this, and this, and I'm able to get paid every single month. So it's like it can kind of like hold you back. So first, gotta have a goal. Then you have to have a goal based on your time and your energy. Then when you're thinking about leaving your job, you should really be like 1.5xing to 2.0xing whatever your bills are each month. And then from there, you can go and take it from like the rest. Now, that is the rookie mistake of the week. Second thing is going to be the book of the week. So I don't have the exact original copy, but the book of the week is called Rich Dad, Poor Dad. This is a different book within the same series, and I'm just going to kind of use it to illustrate the points. But the first business book that I ever read, and this is like a book that every like bookkeeping business owner should read, is called Rich Dad, Poor Dad. Now, this initially was like it's basically like it's a mixture of a strategy and a mindset book that's designed to help people that maybe are from a job to start thinking about like making money slightly differently, right? The main premise of the book is that there are different levels and different quadrants in how people make money, and depending on which quadrant you're in, you're going to make more money easier, pay less in taxes, and have a much better life. So an illustration I like to think about is actually called this is what it's called, their cash flow quadrant. So EBSI. So there's 4 different sides of like the income equation that you're on. So what happens for most people is most people start in the E, right? So that's like an employee, right? So basically you're trading time directly for money, and you're kind of capped, and it's really based on, what you do. It's based on like your labor of like what you do for another person that is in a different quadrant. So the person that owns that business is going to be in a different quadrant, which we'll talk about in a second, but you're generally the person that's like driving all the growth of the company, but you're not really getting much of the benefits that people who are in ownership are actually getting. The next place that most people go is like a S. So this is a small business. So basically a small business is, as the word says, it's like a small business. This can be like a solopreneur business. This can be like a mom and pop shop. Now, when this book was written, it was actually written, I believe, in 1997 or 1996, and this was really before a lot of these internet businesses took off. So in this book, he was basically trying to say that, like, small businesses or self-employed are not as good as, like, the other type of quadrants we're talking about. But nowadays, since you have these internet businesses, you can basically have the results of having a really good sized business without necessarily having the complexity of like long staff, having to like pay for a lot of different overhead. And it actually, in my opinion, is a much more attractive option for most people, because what I've kind of noticed is when I started, I thought like I want to have this giant business. I want to have like 20, 30, 40 employees. I want to be making like $10 million a year. And I never really thought about, because out of that $10 million in revenue, how much do I actually want to bring home? And like out of that money that I bring home, like what do I actually need to kind of fuel my life? Because at the time I was just in survival mode, right? I was starting my career. I was, kind of thinking about climbing the corporate ladder. But once I started reading these books, I was like, oh, there's another alternative way. I can make more money than like what a boss of this company would make with less effort if I just focus on like the right skill sets and just doing things, in a slightly different way. And the cool thing about this is that you can make 1% money, or even top really it's top like 7 to 5% money. So that's like really making 200, 250 a year. And really just kind of having a really good quality of life. Because like what I found is most people, like if someone starts as an employee, they generally want to like have, it's not necessarily a business they want to have like a lifestyle business where it's basically a lateral step from the job, but it's less stressful. You control the shots. You're not really at risk of like your income going to zero, and you're really in control of your like financial future, and just gives you the freedom to kind of enjoy the world and explore. That's what I really turned both of my businesses into. Like our mentorship program and our accounting firm are really lifestyle businesses. So they're lean, they're profitable, and they're very, very efficient. And you know, that's one thing I really learned a lot from really kind of being in action in this book. And I'll tell you like the reason why, like, you know, there's some good things about this book, there's some bad things about this book. Like looking back, I think it's 15 years after I first read this book. I read this book 15 years ago. So when I read the book, and like the reason why this book is cool is because it gets you started on your entrepreneur journey. Really was like opening your mind into like what's possible for you, and then from there your job is to kind of like learn like what's the business model that works for you. Like how do you actually make money? It doesn't teach you how to make money, it teaches you how to think about making money, so whatever you decide to do business wise, you're able to have like a really good foundation and find success really, really quickly. Now for me, what ended up happening was I would choose different business models. Like I tried things like I tried a food prep company, I tried e-commerce, I tried doing like a marketing agency, a website building company, right? A bunch of different businesses that didn't really work until I started like really leaning into what I was doing my day job, which was accounting and bookkeeping, right? So once I started doing that, that's when the bookkeeping business started like being more promising. But that's number one. Number two, so going back to these quadrants, so this was a small business, right, the S. Next is B, that's a big business. That's like, you know, like Facebook or like multinational companies. Now, most people watching this video are not going to build a business of that size. You're not going to have 30, 40, 50 employees. You're probably going to have anywhere between like 0 employees to maybe like 5. And when I say employees, that can be substituted with contractors in this particular case. It's just people that are around you that are helping you. And the reason why is because like this business model, if you're doing an accounting and bookkeeping business, it's very good at getting anywhere between like 10K to about 75 to 100K per month. Once you start getting outside of there, that's when, you know, it can be a little bit more stressful to kind of do it. So you have to kind of pick like where do you want to be within that business model. Now for some people, if you're like your goal is like I got to make 100K or bust, I would probably reevaluate those goals in the beginning. And like when I first read this book, I was one of those guys like, yeah, you know, I'm gonna go and start like this like $100 million company. Like this book told me it was possible, I can do it. And then my dad's like, well, you know, in order to start a $100 million business, like you probably have to first hit 100,000, then a million, then 10 million. I was like, that's too easy, I got it. You know, this book, it kind of gives you this like sense of like arrogance and confidence that you can do anything. It's really, really good, like a marketing piece or whatever, because he's trying to get you to buy his seminars and stuff. But, you know, that's the one thing I would probably caution about when you're reading this book is like it's very easy to kind of feel like the world is very, very easy, or the world of business is easy, and that like it's not going to take you much time to really get to these spots where in a lot of cases a lot of steps in between, like, you know, E to big business, and most people think that they're just going to magically get it. And like, yeah, so that's one thing. Like if I could go back in time, I would definitely like kind of remove the arrogance I got from it. I was like, because it also feels like you're learning like the secret that nobody else knows, right? Like, okay, so if I can just grow like this, and I can do this, and I can do this, I'm gonna be a multi-millionaire, and it's gonna be amazing, right? So it kind of gives you this thing. It's like it's inevitable that it's gonna happen immediately, and that's not the case, right? So in a lot of cases, this book has been known to create like really bad mindsets in people. So that's like one, like it's good to start, but if you can kind of temper that arrogance that comes from this book, then it's like, okay, you're good, and you can like really use it. It'll make you find success faster. Another thing this book kind of is in my opinion is bad for is that it creates this illusion of like, you know, one of the most famous sayings out of this is like, don't trade time for money, or like, you know, the rich don't work for money, or like it's these very kind of like AIRE, so like airy kind of concepts that are like, it sounds cool, and for someone that's like really burned out at their job, that's like amazing. Like, I'm tired of working for money, you know, I don't want to trade my time for money anymore. But in reality, like for most businesses, like someone is trading time for money, whether it's time to think, whether it's time to talk, whether it's time to do the accounting. Like you're always trading time for money. The problem is two things. Number one, you're not getting enough money per unit of time. Number two, you're not fairly compensated based on the lift that your service is getting. So what I say earlier, usually if you're an employee, you're doing a lot of the work, but you're not getting much of the upside. So basically what your employer has done is it has de-risked your life by giving you a very consistent paycheck, or even it's hourly. Like there's consistency. Versus when you're the business owner, there's a little bit of inconsistency in the beginning and a lot more risk. So by really working with people and like giving them a job, you're taking on much more risk than what your employees are taking. But it caused your employees, when your employees do really well, you get a really big bump. But when your employees do bad, you get a really big loss. So it's less consistent in the beginning if you don't really know what you're doing, which is why most people, are in that, employee kind of quadrant in the beginning. But when you are now starting your business, you become uncapped essentially. But now, not only are you like getting paid for your time, but you're also getting paid for your performance. So let's say, for example, you're doing like tax planning. If you're offering like tax planning to people, you can charge your price based on like how much you think you're going to be able to save them in a lot of cases. Now you can't present it to them as that way, but that is one way you can kind of like think about your pricing, right? Because everything we sell in life is based on this person gives me this, they're getting something for more in return, right? That's how units of trade actually work. I give you $10, I'm expecting to get like, a $10 book that maybe can either be worth the same amount of money, or if it's a service or a product that we're buying for like our business, you want to get $10 more. So I pay you $1, I should get $10 worth of utility out of this service or out of this thing that I'm buying, right? So when you start your own business, you're able to tap into that extra utility and extra performance. So now even though you are still trading time for money, it's at a much higher unit like measurement. For example, for me, when I make a YouTube video, I can make anywhere between $300 to $1,000 per video. And some people ask, like, why do you make so many videos? Like, every video I make anywhere between like $300 to $1,000. So it's kind of cool, But before, if I was like an employee and I was like working for a YouTube channel, no matter how many videos I make, I would still like, only get a certain amount of money. Now, the last quadrant that I've seen a lot of people that they talk about is I. So this is investor. So this is when you can start like, you have a lot of cash reserves. You can start doing angel investing. You can start investing in real estate. You can start investing in stocks. Me personally, I love investing in more like paper assets. So I like investing in stocks, ETFs. I like investing in gold ETFs. I like investing in real estate ETFs. I don't like having like the physical properties in a lot of cases. A lot of different reasons for that. It's not to say I'm against real estate investing. I like stocks more because it's just so liquid. And like for me, I can take that money from the stocks and I can reinvest in the business. I can keep going like back and forth wherever I see fit to get more gains at a much faster kind of pace than what the average person can do. So what I've actually discovered, because like in this book they basically say you want to go from employee to small business to big business to investor. What I found is actually an easier wealth generation tool for most people is you go from employees to you having your small or solo business, and then you start investing with the profits from this business to keep getting more and more greater returns. You see, this is what a lot of businesses are going to start doing in the next like 5 to 10 years. It started with a company called MicroStrategies, and this year they've done I think like the most growth out of any like stock on the market. So they've even beat like Nvidia, right? So this year the news is talking about Nvidia and stuff like with the chips and how they're doing so well. But MicroStrategies actually has 2 times greater return this year than what Nvidia does. It's actually really interesting. But what they basically are doing is every single dollar worth of like profit or like in like their treasury, they're actually investing into like Bitcoin. Now, I'm not telling you to invest in Bitcoin, but what they are doing is they're taking static money and they're putting it inside of something that's not only beating inflation, but Bitcoin is growing by like 60% a year. So what I usually do is I will invest my money in like either S&P 500 or like dividend stocks, or in some cases like some high yield dividend stocks that are like really risky. When I say risky, it's like the principal can go down, it goes down up very like quickly, but the return on the money is very, very cool. It's like 10% dividends like a month. It's really, really cool. So you get actually 1.2x your money if it goes over like the course of the year at a consistent rate. Now, Not necessarily giving you financial advice in this. I'm not telling you to invest in, this stock or this stock, but I'm just giving you an understanding of what you can start doing. So this is a really cool thing, because there comes a time where you don't actually have to work quite as hard in your business, because the money you've already made from previous year is now compounding. And it keeps getting faster and faster. And then pretty soon it actually makes almost as much, if not more, than what your business makes. Now, depending on how much money you're making per year, of course, right? If your business keeps scaling at a proportional rate to what your investments are going, then your investments probably are not going to outpace it for a little while, right? If you start getting to like $500K a year, okay, well, it might be hard for your investments to make an extra $500,000 per year, but it's really easy for them to make an extra $100K a year or $200K per year, right? So that's kind of what I think of when I think about this book, and when I really think about like how to kind of grow. Now, yeah. That's basically what Rich Dad Poor Dad teaches. It's like how to think about money, getting you to start your journey, thinking about how different people make money and what makes someone like really, really successful more easily, really learning how to think about the way you make money. Not necessarily that you never work for money again, but thinking about more leveraged ways to make money, and then have your money make even more money over time. And as long as you can focus on, not getting arrogant and not getting lazy, because, again, you do have to work for money still, at least in the beginning, then you'll be successful, okay? Hope you learned something new. This has been the Bookkeeping Business Secret Podcast. I can't wait to see you inside the next episode. Also, if you want some help growing your bookkeeping or tax planning business, go ahead and click the link inside the description either above or below the video. Book a call with myself. Let's see if I can help you inside of one of our mentorship programs, okay? I'll talk to you soon. Have a good rest of your day.